Good morning and welcome to today's hearing entitled Navigating the Digital Payment Ecosystem, Examining a Federal Framework for Payment Stablecoins and the Consequences of a U.S. Central Bank Digital Currency. Global payment systems are leveraging technology and modernizing legacy infrastructure, driving innovation and expanding access while lowering costs. The evolution of payment stablecoins and their increasing adoption beyond the digital asset ecosystem reflect broader modernization efforts in the United States and the global payment infrastructure. Every day there are billions of dollars of stablecoin transactions, reducing friction in cross-border payments, streamlining commercial transactions, and giving more communities broader access to digital financial tools. Since 2022, committee Republicans have worked to establish a legislative framework that strengthens their potential to become a cornerstone of a modern payment system. Last Congress, this committee passed the Clarity for Payment Stablecoins Act of 2023. At the start of the 119th Congress, we built upon this foundation in coordination with the Senate Banking Committee. The House product, the Stable Act, which we notice as a part of today's hearing, reflects these key themes. Since its initial notice at Digital Asset Subcommittee Chair Brian Stiles' hearing last month, we've incorporated updates to the discussion draft based on the extensive written feedback that we've received. These refinements serve to strengthen the operational standards for payment stablecoin issuers, as well as clarify the supervision and enforcement authorities of state and federal regulators that will oversee these entities. The Stable Act also makes sure that Bank Secrecy Act and anti-money laundering compliance, along with cybersecurity and oversight, are a critical part of the framework. The committee is grateful for the engagement and the feedback that we've received on the Stable Act, and we hope it will continue as we further iterate and strengthen this legislation. A properly regulated stablecoin market can strengthen the U.S. dollar's dominance, modernize our payment infrastructure, and promote financial access without government overreach. It's essential that we deliberate and get this job done and done right. Unfortunately, there's a competing vision about the future of digital money, one that puts the government at the center of every transaction, and that's a central bank digital currency, or CBDC. A government-controlled digital dollar would put the Federal Reserve in direct competition with the private sector and undermine the very progress that stablecoins are making. Chair Dan Muser's Oversight and Investigation Subcommittee has explored the troubling cases of debanking of politically favored industries. Unlike stablecoins, which operate in a competitive market, a CBDC would concentrate financial power within the federal government, restrict consumer choice, and undermine innovation that has made the U.S. financial markets the strongest, most liquid in the world. A CBDC would also suppress competition, jeopardize financial privacy, and weaken the role of the U.S. banking system. I'm so grateful to my colleague and friend, Republican Whip Tom Emmer, for leading the charge to prohibit a U.S. CBDC, and I thank him for the work that he's done to get his anti-CBDC Surveillance State Act reintroduced in this Congress and noticed for this hearing. Before I close, I want to emphasize that in addition to payment stablecoins, this committee has continued its efforts on a bipartisan basis to begin the work that we began last Congress to establish a comprehensive framework for digital assets market structure. We're moving full steam ahead in this Congress to strengthen and expand that pro-innovation agenda. I look forward to today's discussion, and I yield back the balance of my time.